earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Ambesh Tiwari from Essential Technologies. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I welcome you all for the Q1FY26 earnings call for Apar Industries. To discuss the business performance and outlook, we have from the management side Mr. Kushal Desai, Chairman and Managing Director, Mr. Chaitanya Desai, Managing Director, and CFO Mr. Rajesh. I would now pass on to Mr. Kushal Desai opening remarks. Thank you, and over to you, sir.
Thank you, Ambesh. Good afternoon, everyone, and welcome to the Apar Industries Q1FY26 earnings call. I would like to start by actually giving a quick overview of our performance, then get into a quick industry update, and then post that we can look at the segmental performance and finally open the floor to questions. We have started off FY26 with a notable first quarter result. Our revenue for the quarter grew 27.3% over the same period last year to reach 5,104 crores. And this was driven by growth in the domestic business particularly. Export revenues contributed about 31.6% to the turnover. Our EBITDA is up 27% year on year to about 501 crores, which is at a margin of about 9.8%. Profit after tax came in at 263 crores, which is about 30% growth year on year, with an absolute margin of 5.2%. In terms of key industry highlights, India's renewable energy sector has recorded its strongest growth in the last 3 years, with power generation rising by about 24% in the first half of 2025 compared to the same period in 2024. The renewable power generation has reached 134 billion kilowatt hours in the January to June 25 period, which is the highest semi-annual growth rate that has been seen right from 2002 onwards. June 2025 alone added about 7.3 gigawatts of renewable energy. This is about 4 times what it was in the same period a year ago, which was 1.4 gigawatts. So this sharp increase has primarily been driven by both expansion in solar and wind, and this has been further advancing India's clean energy transition. In the meanwhile, you will also find that coal-based electricity generation has declined by nearly 3% in the first half of 2025, and this was influenced to some extent by milder summer temperatures that reduced the overall power demand. However, we expect that in the short to near term, there will be an increase in conventional energy as well to ensure that the base load is being maintained. In terms of recent tenders and projects in the renewable sector, I would like to point out that in June 25, approximately 6.8 gigawatts of renewable energy tenders were issued for project development, reflecting that the sector is still seeing momentum. SECI, which is the Solar Energy Corporation of India, has invited bids for 2 gigawatts of interstate transmission systems connected to solar projects, along with additional between 1 gigawatt and 4 gigawatts of energy storage systems as well. So during the same period, 520 megawatt of EPC tenders were announced, including 260 megawatt of solar EPC floated by NTPC in Rajasthan. Further, about 1.6 gigawatts of BESS, which is battery energy storage systems capacity, and 312 megawatts of renewable energy capacity were also awarded to developers. So there is a lot of action that is happening in this sector, and you will see that increasingly more and more systems are requiring storage solutions in place. On the transmission side, According to Central Electricity Authority, India has added 22,190 MVA of new substation capacity in the first quarter of FY26. This is of 220 kV class and above. And this is more than double what was added in the same period last year. However, this achievement is still significantly short of the planned capacity, which was supposed to be 48,185 MVA for the quarter. So there is a pent-up demand which is continuing to be built up. In contrast, the addition of transmission lines in the first quarter of FY26 was much below target. Only 1,031 circuit kilometers of lines which are 220 kV and above were added, representing just 17% of what had been targeted, which was 6,000 circuit kilometers. Some of these delays have been actually attributed to segments where the right-of-way has not come through, and there is a lot of attention being provided to get these clearances. And once again, we feel that as these clearances come through, there will be significant call-ups and demand coming up. So in the full year FY26, the planned addition of transmission lines stands at 24,400 circuit kilometers, which is planned to be 2.5 times what it was in FY25. Now coming to more specifically the business performance by each segment, I'll cover the conductor segment first, follow that up with the specialty oil segment, and then finally close with the cables. So in terms of our conductor division, Q1 FY26 revenues grew by 43.9%, 44% year on year, on the back of improved product mix, higher realization as well as volume growth. The volume has grown by about 18% versus Q1 FY26. Exports contributed about 20% to the overall revenue of the conductor division, as opposed to almost 30% in Q1 FY25. As I mentioned in my opening remarks, on the conductor side, the domestic business was quite strong during this period, and the domestic order book as well as the expected business to be awarded, as I mentioned in my opening remarks, continues to look strong. Our US revenues grew by almost 83% over Q1 FY25 and 8.6% over the fourth quarter of FY25. Looking at our premium product mix, that contributed 43.5% in Q1 FY26 compared to 37.1% in the last year. On the profitability front, the EBITDA post open period forex came in at 43,688 rupees per metric ton, as against 38,532 per metric ton in the same period last year. This can be attributed to an improved US and export product mix, as well as growth in the premium business. If you look at the order book, our current order book stands at 7,779 crores, and the new orders received during the quarter were about 3,135 crores. So all in all, the conductor business has put in a very strong performance. Coming to the oil business, even though the revenues seem to be flat over last year, given that the average price of crude gas oil and some of the derivatives were lower than the same period previous year. However, the volume has grown by 8.1% compared to Q1 FY25. Transformer oil volume was higher by 7.4%. The domestic transformer oil volume grew by almost 20%. So it's really the overseas business which was a bit slower. Automotive oil grew by about 8.4%. Industrial lubricants grew by around 15.9% year on year. However, as I said, the export side was a little bit slower. Many transformer oil projects in some of our key markets like Saudi Arabia, South Africa and Australia have got a bit delayed. We do have a strong order book, but its execution has been pushed out by a few months. For the first time, the export mix actually came down to 36.7%, which used to always remain 40 plus. Last year, on a comparable basis, it was about 45% of our revenues. Our expectation is that this is a temporary blip, and as the project executions start picking up, you will see this whole equation reverse. When you look at EBITDA for KL, it came in at 7,004 rupees as opposed to 6,935 per KL a year ago. Now coming to our cable segment, revenues in Q1FY26 posted a revenue growth of 36.3%, and revenues have reached 1,419 crores. There has been a strong export performance in the cables division. Domestic revenues grew 19.7% year on year, whereas our US revenues actually grew 136% over the same period last year. Part of this was, meeting customers calling up product to meet a deadline of 1st August, where, the tariffs will change pending a conclusion on the tariff agreement between India and the US. So if you look at the export mix, it came in at 41.3% versus 33.2% a year ago. If you see EBITDA post-forex, that also grew almost proportionately by 32.2% to reach 142 crores. The EBITDA margin came in at around 10%, which is marginally lower than what it was in Q1 FY25. The current pending order book stands at about 1,653 crores. If you look at exports in the non-US markets, we continue to encounter some headwinds due to the subsidized exports taking place from China. I had mentioned in the last earnings call that we had at the end of the full year results, where Chinese products are being subsidized by between 8 and 12%, and that trend continues. The trade deal with the US unfortunately has not yet been closed, so the impact on India still remains a bit uncertain until this issue is settled. However, pending the finalization of the import duty structure, we are given to understand that many US clients are sitting on the fence. They are going a little slower in terms of ordering, as we are not clear exactly what the landed cost will be. Having said that, we are hopeful that the India duty rates should not be a huge disadvantage compared to some of the countries that so far we have been having to compete with, which are fundamentally Vietnam, Cambodia, Indonesia, Korea, Mexico, and the EU. However, we are optimistic that in the medium to long term, the demand in the energy sector, with all the various initiatives that are running, continue to remain strong. In Europe, ESG requirements are continuing to increase, and in fact, participation in tenders is becoming contingent upon clearing a certain basic ESG screening. So as I mentioned in the last earnings call as well, that we are continuing with our planned capex spending of about 1,300 crores. So far we've incurred 150 crores of capex in Q1, and we additionally expect, based on the orders that have been placed, about 350 crores to be spent in the next for a few months, within the quarter, maybe running up to the month of October. This will enable us to be prepared for the future and tap the various opportunities that come by. I'd also point out that we have a detailed corporate presentation in the investor section of our website. Also, this year, Apar has released an integrated annual report. It's a very comprehensive report which covers not only the financial performance, but it integrates ESG considerations within the report. And we'd be happy if all of you go through it, and if any of you have any feedback, because this is a gigantic exercise that has been undertaken and it's for the first time that we've done it. Please feel free to give us your comments and feedback, because this is something that will continue going forward. So with this, I'd like to come to the end of my comments, and I'd like to turn it over for any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Vidit Trivedi from Asian Market Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congratulations on great set of numbers. My first question is with respect to the conductor division. We've seen the realization is close to 43,000. My question is, how sustainable are these levels, or should we stick to the earlier guided range of 30,000 plus tailwinds?
Yeah, we have always been saying this, our conductor division, because of the various products that we have, the premium and non-premium mix changes, and also the geography mix changes, and different product categories have different margins. So always we have been saying that our guidance has been about 30,000 plus tailwinds, and in many ways the tailwinds are not so easy to predict. So we continue with the same guidance, 30,000 plus tailwinds. And the tailwinds will depend on the use of premium mix and non-premium mix, on the various metals involved, the geography mix, the kind of products which are there. Comprehensive mix of that will determine the EBITDA for the quarter.
Got it, sir. So second, on the US growth this year in the conductor division, it's close to 83%. So can we assume that this is also because of the pre-buying? As sir mentioned that in the cables division, a lot of activity was seen because of the pre-buying.
Yes, to some extent, yes, we can see that one of those activities, because this duty structure is uncertain at this stage, and therefore customers have been insisting for some early deliveries.
Sir, what's the rate of duty when we export to the US and the other players export to the US?
Ours is subjected to reciprocal tariff, which is 10% plus the duty, which was already there, about 5%. That is what the products from India we are subject to. But then different countries have different rates of duties. In some cases, the reciprocal tariffs are there. In also, as you have been reading the newspapers, there's a duty on aluminium, on steel also. So that duty is different than, and the reciprocal taxes are on top of that.
Got it, sir. Thank you. All the best.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Am I audible?
Yes, Mr. Nitin. Please go ahead.
Yeah. So just first question on the conductors. When we look at your export mix, okay, on a quarter-on-quarter basis, it has still not moved that much as a share in conductors. Then it looked like to us that this realization growth has come from the domestic side largely. Can you throw some light? Is this analysis correct? And how you're seeing domestic prices, specifically AL59? And also, if you can throw some light, do you think there is a likelihood of expanding more of these capacities, because you yourself said that domestic demand continues to remain strong? So just on one of that aspect, if you can throw some light.
So on the first point, it is correct that the domestic market is the one which has driven the growth compared to the export. And on the second point, the various products which we have been expanding in on the copper side as well as on the aluminium side, both have grown in the domestic market. We see more of a possibility of growth in volume rather than expansion in margins, especially on AL59.
And on the pricing of AL59, how that has been panning out. Why I'm asking you this? Because it was always our exports which used to drive EBITDA per ton or realization per ton on the conductor. But this is the first time we are seeing that export market is so strong that it's taking your EBITDA or rather your realization or EBITDA per ton so higher. So on the pricing side, do you see any risk in the domestic market, or you think the demand is so strong that this pricing will remain for the next 1, 2 years or 3 years? How you are looking, sir, a little on a longer term?
So this, Nitin, the function of EBITDA was one, exports, as you rightly said, but also the function was on the premium products that we've been selling in the domestic market. We have the premium products that get sold on the domestic market and the standard products that goes to the export market. These two have been accounting for the high EBITDA margin. And as you have seen in the earlier, even in the non-premium part of the domestic business, lastly, because of AL59, we've been able to get a higher price as compared to the traditional ACSR conductors. And as of now, and it has been happening for the last 2-3 quarters, the entire AL59 has replaced the traditional ACSR market. So there are these three things, at least on a big scale, that is accounting for the higher EBITDA. Export was just one part of it, but the high premium mix as well as more use of AL59 has also added to the EBITDA margin for the division.
Just on that export part, I think you explained in the last call as well, because one is obviously the reciprocal tariff. The other part, even on the steel, aluminium, they are putting a lot of tariff. I'm talking about US. And that's where Sir touched base that there might be a situation that he might start putting capacities there. Because as you rightly said in the starting of your point, what will be the landed cost? Nobody knows at this point in time. And that's for every country. Given steel and aluminium, I think the duties are similar. India is not known how much they will put on us, but at least for the other markets, the duty on steel and aluminium is about 30-40%.
I'll just clarify that.
Yeah.
So, there are the tariffs in the US. There is one which is a reciprocal tariff. However, the basic materials, which is steel, aluminum, copper, and a few others, are falling under a completely separate classification called Section 232, which are products of strategic nature to the government of the United States. So there the tax is an absolute, the tariff is an absolute tariff. So currently for all of these three items, that is steel, aluminum and copper, it is at 50%, 50%. So if a local aluminum manufacturer, if a local conductor manufacturer needs to import aluminum or someone needs to import copper or steel for that matter, they also have to pay 50%. So, the situation is a little bit fluid in terms of where this is finally going to settle. Mm-hmm. Because just recently, it was just about a month ago that it was increased from 25 to 50%. And copper, which was previously zero, has also come into this 50% band. So there's been so many changes that have happened that I think a little bit more time will allow, all of this to settle down. In the meantime, there will also be some more clarity in terms of the reciprocal tariff that India will have with respect to the US. What I mentioned earlier in terms of the rates with some of the countries from where imports are taking place, that is a reciprocal tariff. So the Section 232 is an absolute number. There is no reciprocal tariff, nothing. It's just a fixed number irrespective of pretty much where the import takes place. So I just hope that I've clarified, this.
It's absolutely.
It's a little bit complicated, but this is what our understanding is based on what our US advisors have informed us.
So this is very helpful. So basically anyone, either you supplying from India or someone else supplying from the other country, the raw material import cost is the same, or any US local player also importing that, the duties are the same as of now.
The American manufacturer will have a 50% duty on his raw materials, not us.
Right.
We don't have 50% on our raw materials.
So supposing we are exporting a cable which is having aluminum in it at the moment. So right now the reciprocal tariff is 10%. The basic duty is 5%. So you end up paying 15%. If today I file a bill of entry in the United States for aluminum ingots, it would actually attract a 50% custom duty under Section 232. Now, what the final Indian tariff settles at, we need to still understand. But I mentioned a few countries. The EU currently, the settled deal is at 15% reciprocal tariff.
Right.
And you've got Vietnam, which is sitting at 19 or 20%. Indonesia is at 19%, etc. Japan is at 15%.
Mm-hmm.
Yeah.
Let me ask you this way, sir. At what percentage you think will go favor for India, at least for our business? I don't know about any other business, but
so we were previously competing when the tariffs were the same. For when the tariff was the same for Indonesia, Vietnam, India,
right.
Korea, Japan, all these places.
Right.
So if we are not at a disadvantage relative to these countries, then it should. The customer will be bearing a higher price, and whatever is the effect of the project cost going up will result in some amount of demand getting a bit handicapped. But we will not be at a competitive disadvantage to these countries. The EU is at 15%, which is lower than the rest of the Asian countries where the export is happening. But I think in the course of the next few days, I think there should be more clarity on this particular front.
Got it. Very helpful, sir. I'll come back in the queue. Thank you so much.
Thank you. The next question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, so thanks for taking my question. First question on the cables business. This quarter we saw pretty strong exports growth. Export number for cable is almost 586 crores versus almost 350-400 crore run rate whole of last year. And despite that, the margins are keeping at about 10%. So first thing I would like to understand is this strong export is coming from only US or there's other functions also. And second, despite export contribution going up this quarter, why the margins are still keeping at 10% for cables?
So there is an overall growth in exports. A larger portion has gone to the US market. Part of it was, as I mentioned in my opening remarks, to try to pick up a tariff where it had been declared at that 10%. There has been some impact that has happened because in some contracts the customer has paid the higher tariff. That's the 10% reciprocal tariff. In some cases, we have had to negotiate and compromise with the client and make sure that all of this product has gone through. So a combination of these, plus some of the freight rates also had gone up in the short term when everyone is trying to push the product into the US during this interim period, where the tariff was pushed back. So there's been so many moving parts, so I wouldn't look at it as a fundamental change in the business economics. What fundamentally can change is if the tariff situation becomes something that's highly unfavorable. I also want to emphasize that the US market on cables is about $55 billion, and 40% of those cables are still imported. And even though there are a bunch of new plants which are being declared, if you look at the cumulative output of those 4 or 5 major plants which are coming there, the output would just add up to a few $1 billion. And the growth rate there is about 3% a year on year, at least so far. So just the growth is equal to $1.5 billion or $1.65 billion a year. So our assumption is, or thinking is that once this noise settles down, there will be a certain, the demand should start coming in. The issue right now is that if someone were to say that what is the landed cost of my product, you're not in a position to give that number.
Yeah. Sir, again, for cables, earlier we were highlighting about the competition increasing. So any change on domestic market on the competition front for cables as well as conductors both?
So on the cable side, the competition does continue. There's really been very little change in the intensity of competition. We have been focusing on certain areas where Apar has been fairly strong. One of the segments which has been growing very rapidly is the wind segment, because that's something that was very slow for the last few years. Currently, there are several new windmills going in, especially the hybrid projects, which is a combination of solar and wind. So we are seeing a good growth on the elastomeric cable and the windmill side. But otherwise, there is no change in there's no major change in the competitive intensity. It still remains competitive. So our emphasis has been really on improving productivity and taking out conversion costs, energy efficiency. We have a bunch of new windmills which are coming through for our own third-party captive, which should also help reduce power costs, etc.
Right. Sir, on cables part, the premium mix has gone up significantly. Q4 it was about 1,300 odd crores. This quarter also roughly about 1,200 odd crores. The run rate previously was only 800-900 crores. So wanted to understand, you explained that the reason also for EBITDA pattern being higher is the standard product sales in US and premium product sales in India. So wanted to understand which premium products we are talking about, if you could explain more in the domestic market, which has contributed very strong contribution from premium products during this quarter and in Q4 as well. Yeah.
So generally, there's been improved execution on the HTLS, which is the high temperature, low sag. There's also been a growth in the entire copper set of products. We have overhead railway conductors, we have copper transpose conductors going to transformers, and we have bus bars. So that range also has grown, besides the HTLS and some of the execution of the semi-EPC turnkey projects that we have on the HTLS. So overall, that whole group, every line item has pretty much shown an increase on that side. That's how we are seeing. Even the order book has increased by almost 8 percentage points from the same period in the previous year.
Right. So any color on, that is my last question, any color on the non-US business this quarter, and how has been the performance in non-US business for conductors and cables?
So the non-US business inquiries continue, but we are finding in many cases, some of the domestic projects are more interesting than going down in pricing for exports in certain geographies, especially Africa and some parts of Latin America, etc., where the Chinese products carry a fairly high level of acceptability. So our strategy has always been that, what is the best net back that we get, and based on that, we've been allocating where we want to export. Over the last few years, and including in this capex cycle, we keep on increasing the fungibility of our equipment. So it gives us so much more flexibility to be able to move around within the product mix. So that's why sometimes you find that Ramesh starts off being more conservative, and then, the numbers, because if the opportunity comes up, we have the ability to switch, on the fly.
Yeah. Just a clarification on capex, we said 1,300 crore and 350 crore is additional, or it is the part of
that's the execution of that. So already, when we spoke about this 1,300 crores, which we expect to spend by June of 2026, of that 150 crores physically has been already spent, and then 350 crores is what we expect to spend in the next few months. So progressively it will go through. The big payouts will come actually around November, December, January, when you pay for all the equipment, because initially you pay 20-30% of the value of the equipment, and the rest of it comes later on. So progressively this is being executed.
Understood, sir. Thank you so much, and all the best. Thank you.
Thank you. The next question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hi, am I audible?
Yes, Mr. Garvit. Please go ahead.
Good evening, sir, and congrats for a decent set of numbers. My first question is from your opening remarks. You mentioned about the transmission lines that we have achieved 17% of our annual target for FY26. So, is it due to monsoons entering earlier in India or any structural issues that you are seeing?
No, so last year the last year number was very majorly affected because of the elections as well. But if you're talking about so far in the first quarter, 17% of the planned quantity has been executed. So if you were to split it into 4 quarters, it should have been about 25%. So there is a little bit of and part of it is because the monsoons did come in a bit early. There's also a right-of-way issue. Many lines have got stuck because of right-of-way acquisition matters. There's also a few forest permissions and clearances that are required. So the expectation is that given the fact that so much solar is being added, these lines also will have to speed up. And I think everybody right from CEA downward, including the PMO's office, everyone is aware of this particular issue. This is on the back of last year being also relatively missing the plan, as I mentioned, by a fairly large number. So there is a good amount of pent-up demand which should come up, in the domestic market.
Got it, sir. And secondly, on the there are some issues happening in the industry related to delays in approval for solar projects that are to be connected with grid, and some land availability issues that you rightly mentioned in the domestic market. So conductors are also important components in the wiring of the solar plants. So are you seeing any slowdown here in the orders in Q1?
So we've had a reasonably good order book, as we mentioned, 3,000 plus crores, 3,175 crores approximately. So the order flow has still come in, and our expectation is it should continue as these execution takes place. It's if they had gone as per the plan, there would have been more business than we've been awarded. But our plants are running pretty much full, and in a way, actually, it will time some of the expanded equipment that's coming in.
Okay, but actually, I'm just trying to understand from you regarding the industry issues that recently came into picture regarding some approval getting delayed with respect to solar parks to be connected with the grid, and secondly, on this IFTS waiver that is removed from the inter-transmission connectivity. So, are these issues anyway going to impact our business going ahead?
I don't think so. In fact, these are matters which have to get resolved, and I think, as I mentioned, even at the highest level, there is a reasonably good understanding of what the issues are. So, people are all working towards, solutions on this. So, in fact, on the contrary, I believe that in the months going out, you may see stronger demand. Once these issues get sorted out, there will be more ordering that will take place.
Got it, sir. Thank you very much, sir. That's it from my side, sir. All the best for the future. Thank you.
Thank you. The next question is from the line of Charanjit Singh from DSP. Please go ahead.
Yeah, hello, sir. Thanks for the opportunity. So my question is on the premium conductors. So specifically in the domestic market, if you can help us understand in terms of the demand-supply scenario, and from the growth perspective, what is the current size of the market, and how do you see over the next 2 to 3 years? This is mainly for the domestic market premium conductors.
There are no sources to get the market information on these kind of premium products. But what is also happening due to various right-of-way issues and the general increase in electrification, there is more tendency to switch to reconducting, due to which the work on reconducting is happening may happen on a faster scale.
I don't like this bringing in a girl thing.
Hello, Mr. Charanjit.
Operator, can you mute other people? Hello?
Yes, sir.
Yes, sir.
Can you mute other people? I don't know from where the noise was coming.
Yes, yes. Sorry for the interruption, sir.
Right.
Yeah.
So Charanjit, there are no organized sources of getting this market for these premium products. But as I said, there is more room to do more. Hello? Hello? Yeah.
Yes, sir.
Yes. So as I said, there are no sources to get this market information. And overall, there is, as I said, there's more tendency to do more of reconductoring projects because of various right-of issues, because of time cost, because of capital cost outlay by the utilities company. So there is more tendency on the premium part of the conductor business.
Okay. Sir, in terms of the execution of the projects and especially in the US market, how you're seeing that on the ground, and when you're saying, in terms of the stocking and the inventory buildup which has happened there, this could be, for what duration, you would generally see the kind of, inventory buildup happening there?
So, Charanjit, on the build-up, it's not really, these are all projects which are being executed. So, most of the products have actually gone to project sites. And I think calling them up a little bit sooner is only because these guys, whoever has been importing the products in, has already given a fixed price, previously for the bid. So this is not like the kind of stocking up that happened at COVID, where there were several months of destocking to take place. At least not in our products, because we were not in a position, already running at a full capacity. We only gave some preference to clear off orders where the settlement had taken place with the customer in terms of we will land it prior to 31st of July. So I don't see really a big overhang from the current supply. What will be critical to see is where this tariff finally lands up, and hopefully it will not be disadvantageous to India. If it isn't, then we would continue to see the order flow taking place. And on the contrary, we've really improved our go-to market channels, the distributors we signed up. We have today a team of 3 full-time representatives in the US. We have a 4th colleague who is going to be joining shortly. So the team is being enhanced, and our sense is that once the noise settles down, then I think business should start picking up again.
Got it, sir. Sir, on the EBITDA per ton perspective, would you like to change your guidance in terms of what the number has been, or you would like to maintain at the earlier level of guidance itself?
So we have been increasing these guidances on the conductor EBITDA per metric ton. You have times where competition is putting a lot of pressure. As you see in the domestic market, there is pressure on prices, and also on the non-US market, there is pressure on the prices. But wherever we feel that we have that confidence that the EBITDA cannot go beyond X level, that's where we put our guidance on, and we have been increasing that. Having said that, in the last quarter, we increased further to 30,000 plus tailwinds. For now, we are studying, and depending on how the future quarters and US tariffs, and there are so many moving parts to all of this. Currently, we would like to maintain it at 30,000 plus the tailwinds. And as I said, the tailwinds could be positive, depending on various things that happens, but we are not able to predict the exact amount of what kind of tailwinds that will happen in a quarter.
We probably wait until all this quarter is settled down. I think after that, if any revision has to be done, I think a more appropriate time would be once all this settles down in terms of US tariff, etc., etc.
Got it, sir. So thanks a lot for taking my questions, and all the best for the future. Thank you.
Thank you.
Thank you. The next question is from the line of Nilab Jade, an individual investor. Please go ahead.
Hello.
Yes, sir. Please go ahead.
Yeah, please go ahead.
Hello, sir. Congratulations on a good number, sir. One question I have regarding the for a long time you were telling earlier, at least in 2024, we have heard that you are facing lot of competitions from the China because they are transshipping the goods to Vietnam. So now, how is the situation panning out after this transshipment tariff has come in? Are you facing some better ecosystem with regards to the competition? You mentioned that they are still giving 8 to 10% subsidy. But this transshipment was a major issue you were facing earlier. How the things are now?
So I think the current U.S. administration is very much aware of this, and I think the undertones have been very clear that if they start picking up activities of this sort, then there could be an immediate change in the tariffs that country is facing, whether it's Vietnam or whether it's Cambodia, etc. So I think the current the level of heightedness that is available now is much higher than what it was prior to the Trump administration coming in. So I think it's something for us to wait and watch. But if this transshipment route is being used, then I think whoever's using it is really gambling on this. That's the sense that we have.
Okay. And another question, I am listening to your conversations. One thing it is, I know there are a lot of confusion right now in terms of tariffs and because raw materials are higher tariff in USA. Net, even if 8 to 10% subsidy China is giving, given that, but there are a lot of tariffs have come in, almost 30% tariffs on Chinese products. So net, I do not across the products. What is the competitive advantage? How much competitive advantage China is now having over us with those subsidies and etc.? How much in terms of percentage?
So, on the subsidies constitute anywhere between 8 and 12%. In terms of efficiency of conversion cost, etc., there is no difference. We are able to, in a level playing field, we are in a position to compete against the Chinese on a day in, day out basis.
Okay.
Yeah.
Okay, fine. Okay, thank you. Thanks.
Thank you. The next question is from the line of Nikhil from Kizuna Wealth. Please go ahead.
Yeah, hi sir, and thank you for giving me the opportunity and congratulations on a great set of numbers.
Thank you.
So my first question is with so much uncertainty to cables export, so are we still guiding 25% value growth in the cable segment?
Yes, we are still guiding 25% value growth on the cables.
So that's great to hear. And then my second question is let's say India, as you mentioned that tariff, we have the tariff of total with the duty is 15%. And if you assume that the reciprocal tariff goes to 15 to 20%, and then our landed cost would be a 25 to 30%. So will we be advantage over the Chinese competition or not with that kind of scenario?
So currently the Chinese tariff is generally running 20% higher. So when the interim tariff for India and various countries was at 10%, the Chinese tariff was at 30%. So right now it seems like the new normal they are looking at is a 15%, which is what they have finalized with Japan, what they finalized with the EU, etc. So it's all speculation right now. It's in a matter of a few days, I think some of this should start getting settled down. But I don't think India will be at a disadvantage relative to China, and that 10% gap will, at least as far as the US market is concerned, may not really be much of a worry going forward. Also, as we mentioned in the last call, this is not the first time that China has had such subsidies, where the Shanghai Metal Exchange is so much lower than LME, and the premium basically doesn't exist there at the moment. So the Chinese government, when the losses go up of the subsidy become too large, they have in the past just completely reversed it as well. So it's not something that will be sitting with us forever. We've seen it happen a couple times before, and we've seen it getting reversed as well.
Okay, sir. That's great to hear and reassuring. And so my next question is like the cable segment. How was the volume growth in that segment? And are we assuming the same kind of volume growth going forward too?
We don't report volumes in the cable segment because there are a number of categories within the segment. So we are only reporting the value over here.
But yeah, I mean, to answer the question that yes, there is the demand, domestic demand remains reasonably strong. For us, what's important is that the premium segments or the segments where we differentiate ourselves, the demand for that, should be strong. Then that's how our domestic participation happens. We are seeing the wind sector is doing reasonably well. We are also seeing that solar is continuing to expand. We are supplying several data centers here in India. So we see that the demand generally in the domestic market has been strong. What may get affected in the short term for the cable side is the export to the US because of until this tariff thing gets sorted out. But fundamental demand, we don't see too much of a let up. It will continue to be there.
Yes, sir. And so my next question is like the new contracts that we are signing on, new orders that we are getting. Who will pay the tariff? Like, are we supposed to pay the tariffs, or it will be split between the client and you? So, what are the new norms of these orders that we are taking in?
So, tariff today is coming as a line item. So, it comes with a straightforward assumption today saying that, okay, the tariff at the moment that we priced it is at this. Whatever changes happen is not to Apar's account, it will be to the client's account. And if the client is not willing to accept that, then we are actually not taking on the business and we are just sitting it out. The orders that are continuing to come in today are those attached to projects which are at advanced stages of execution. Because you see, the cost of the cable is about 5% of the cost of the project. So even if you have a 10% difference, it becomes only 0.5% on the project. So delays in the project actually would result in a much higher overrun than just paying the increased tariff. So we are not taking on any more tariff risks for new orders and new business that we have been signing on ever since this whole tariff thing got declared. So whatever compromises had to be made was before the order book which we were carrying prior to the declaration of the tariff, the 10% increase that happened of the reciprocal tariff. And the same thing is also true on the conductor side. Both the divisions, Apar has been following exactly the same practice.
Okay, so that's really great to hear. And so my next question is like on our conductors order inflow, we are at a 5-quarter high order inflows. So on the conductor segment. So sir, how majority of these might be from the domestic business, as you said. So are we looking at the export? How are the export RFPs and all that in terms of conductor side business order inflow?
Yeah, they are okay. As in, like it was explained in an earlier question, answer towards that we are getting the RFQs and we are giving the quotations, but our success ratio has dropped because of the intense competition from China, which is subsidized. But this may not last for long, hopefully. So we are keeping with the market and we are actively trying to make inroads again into that marketplace, but at a reasonable price.
Okay, sir. That's great to hear, sir. Thank you for giving the opportunity, sir, and all the very best.
Yeah, thank you.
Thank you. The next question is from the line of Himanshu Upadhyay from Bugle Rock PMS. Please go ahead.
Yeah, hi. Good afternoon. My question was on the oils business. Okay, what we are seeing is we are having pretty good growth rate on the better products. Okay, transformer oil, auto oil, and which we have been highlighting in industrial lubricants versus rubber processing oil and some of those segments. But the margins wise, it seems there is not much of an improvement. Okay, though it seems YOY it is some improvement, but again the price of crude has fallen.
So I think the reference which I read out and I mentioned during my opening remarks is a quarter-to-quarter reference. So if you see in the first quarter of last year, it was also the highest margin that was there in the year. So if you see on an absolute level, the margin of 7,000 plus EBITDA per KL is one of the higher margins that we've had.
And are we seeing means the margins what we are having, what we are expecting? Will it be because of product mix improvement majorly, or
yes, it is primarily
price
driven
volatility is helping?
No, the volatility is actually not helping at all. It's actually dragging things down. It would have been even higher. It's really the mix. The transformer oil part of the business has grown, and so has the lubricant side of the business, as I mentioned in my earlier remarks. So these are the two segments which have grown. The white oil business has actually, export side of the white oil business has degrown, because that's really something that's very tactical for us. The margins weren't good, so we just allowed that part of the business to slip a little bit.
And the transformer oil and oils business, some of those challenges which are there on the conductor side, are those the similar challenges on the transformer oil and?
No, so the market segment, the geographic mix is very different for our transformer oil business compared to what we do on conductor and cables. In conductor and cables, both of their largest market outside India is the Americas. So when you add up, the United States, Canada, and some of the LATAM countries, that's where their focus is. If you look at our transformer oil business, we are very strong in Asia, all across Asia, right, including Australia. We have a very strong position in South Africa. We have a strong position in Turkey. And we are the largest in the GCC. So it's a completely different geographic footprint. So there, the challenges which were there is that some of the projects in these countries, in Saudi and Australia, South Africa, got postponed a little bit. So even though we have a good order book, the execution of that got pushed out.
Okay. Yeah, thank you from my side.
Yeah.
Thank you. The next question is from the line of Sagar Dhawan from ValueQuest. Please go ahead.
Yeah, thanks for the opportunity and congratulations on a good set of numbers. My question is on the US demand, sir.